The SRA Accounts Rules 2011 are contained in the SRA Handbook. They are effective from the 6th of October 2011. The rules are subject to the principles set out in the SRA's Handbook, and in particular, 5 of the 10 principles in the Handbook are identified of being of particular relevance to the accounts rules. These are 1. Protecting clients' money and assets. 2. Acting with integrity. 3. Maintaining public trust in the profession. 4. Complying with legal and regulatory obligations and dealing with regulators in an open, timely and cooperative way. And 5. Running your business effectively in accordance with proper governance and sound financial and risk management principles. Turning to the contents of the rules, Rule 1 imposes additional general obligations relevant to the accounts rules, covering matters such as keeping other people's money separate from money belonging to the firm, establishing and maintaining proper accounting systems, keeping proper records, accounting for interest in accordance with the rules, and delivering accountants' reports. These provisions repeat the old Rule 1 principles in the 1998 rules. Rules 2 through to 46 cover the accounting obligations of firms practicing from an office in England and Wales. Rules 47 to 52 cover the accounting obligations of firms practicing from an overseas office. The overseas rules did not appear in the 1998 accounts rules, so they are now incorporated into the accounts rules for the first time. After each of the rules is a set of notes. The guidance notes do not form part of the rules. This is in stark contrast to the guidance notes contained in the 1998 rules, which were mandatory. Those mandatory notes have now been upgraded to rule status in the 2011 rules. Appendix 3 to the rules contains the SRA's guidelines on accounting procedures and systems, and I'll be referring to 1 or 2 of those during the course of this seminar. Turning now to the scope of the rules are expressed as applying to you. You is defined in Rule 2, Sub-Rule 2, as meaning, inter alia, a solicitor, a registered European lawyer, a registered foreign lawyer, a recognised body, a licensed body, a manager or employee of a recognised or licensed body. So effectively the rules apply across the board not only to the firm itself but to all partners and employees working in a firm, which is authorised by the SRA. Under the changes brought about by the Legal Services Act, firms can now operate as multidisciplinary practices. So you could have, for example, a firm of accountants merging with a firm of solicitors to provide both accountancy and legal services. The accounts rules only apply to the activities of a multidisciplinary practice which are regulated by the SRA. So activities carried on by such a practice but outside the regulation of the SRA will not be subject to the accounts rules. Under Rule 6, all principals are responsible for the compliance in respect of the accounts rules. This covers both their own conduct and everyone else's conduct who is employed within the firm. This duty also applies to the firm's compliance officer for finance and administration. Every firm must have a compliance officer for finance and administration. Must be an individual, and amongst his or her other duties, they must report any material breaches of the accounts rules to the SRA as soon as is reasonably practicable. Firms must notify the SRA as to the identity of their COFA, Compliance Officer for Finance and Administration, by the 31st of March 2012, and the COFA's duties start from the 31st of October 2012.